Good Morning San Diego.
Time now is 5:31. A 17% bump in fire insurance premiums is adding a significant financial burden to San Diego homeowners. Licensed California real estate broker Mr. Mark Powell rejoins us once again to talk about what's going on. Is this all, hey Mark, first of all, welcome. Thanks for coming in at such an early hour. Is this all LA fire related, these increases, or were these brewing anyhow?
The majority is LA fire related, but you knew that if you did want to get fire insurance, State Farm was canceling policies. So when you had a policy cancel, you'd have to go to the state of California, their fair policy, fair access to insurance requirements, which was a lot more, and the coverage wasn't as good. So what happened was the insurance company, State Farm, went to the insurance commissioner. They have to do that because of Prop 103, which says that you can't just arbitrarily raise rates. It's a protection for...
You need permission.
You need permission. So they went and they pitched it, and they said, wow, you know, you guys are right. You've already paid out $3.5 billion in claims, all because of the LA fires. We need some relief. But that relief is going to come on the backs of all people. So if you own a house, you can expect your rates to go up 17%.
So whatever the cause, you can argue about what the cause of the fires were in LA. San Diegans are going to, doesn't matter that we're hundreds of miles away, we're on the hook too.
It doesn't matter. And it doesn't matter if you live in a place where there's absolutely no chance of fire. So everybody's going to pay. If you're a renter, you're going to expect to pay about 15%. If you own a condo, about 15% more. But who's really getting it are the people who own rental properties. They're looking at a 38% increase. And guess who's going to pay for that?
The renters.
Of course.
All right, so then what, I mean, think about this. The gas, all right, so you got the insurance going up, you have now your trash you're gonna have to pay for, your parking when you go downtown, every little thing you're getting nickel and dime, suddenly life is $2,000 a year more expensive or more.
It makes it harder for people to qualify for a loan, because every time you add something to the cost of a house, whether it's a trash tax, that's gonna be another $600 a year, or insurance rates, that's going to be another $400 a year. And then you look at our water rates went up, our electricity is high, and even car insurance. You know, in those fires, you know how many cars burnt down?
I'm sure we lost tons
of cars. Yeah. And if you have an electric vehicle, you can't just pick it up and take it somewhere and dump it in a yard. There's a whole process of getting these batteries out, and you have to crush them. So that's expensive. So we're looking at all of these little increases. They're incremental, one after another. It's like the weightlifter who, you know, you got all that weight on you just add that 2 pounds, and everything comes crashing down.
That's a great analogy.
That's where we're at. It's about to just become just so costly to buy a house here.
So I assume that slows the market down to molasses. I mean, who can afford to buy a home right now?
Well, you know what's going to do? It's going to make it so that homeowners that are selling now, they're going to have to finally realize we're not going to get these double-digit increases. They're going to have to come to terms and saying, all right, I have to lower the price of my house if I want to sell it. You can't just keep looking at these online real estate search sites and go, oh, my house is worth this much money now. Well, it's going to come down. Home prices have to come down a little bit just to meet the needs of the people.
So, and that's happening as we speak, or is that something that's happening down the road a little bit?
It's happening now. Zillow forecasts homes are supposed to go down 1%. And understand also, when you go to buy a house, you can't buy a house if you don't have insurance, because you really don't own the house. The bank owns the house, and they say, well, this is our asset, we don't want it to burn down, you have to have insurance. So if you can't get the insurance, you can't afford the insurance, you can't get the house because you can't get the loan.
You know, there's all this talk about making your home and property fireproof. Was there anything that was that was a perfect storm in Los Angeles with the high winds and the lack of water being available? There was nothing you were going to build that was going to withstand that, is there?
Well, that 100-mile-an-hour winds blowing like that was a big fire. But you can do things in your own house to prevent a fire. Now, one of the main things is the vents that you have in your house, the little holes in the side of your house.
Right.
I remember those things, they look like the old Jiffy Pop popcorn.
Exactly.
If people can remember, you used to cook those on the stove. Well, you need to replace those and put in these vents that don't allow the embers to go in. Because what happens is an ember can go 2 or 3 miles. Tiny little embers, they get in there.
And you're done. Your attic's on fire.
Yep.
All right, well, with that happy note, we'll call it a conversation. We'll just see how this plays out, right? I mean, eventually you're going to just reach the breaking point.
Well, the good news is rents are forecasted to go down and home prices are forecast to go down. So there's a little bit of relief. There's a little bit of a rainbow at the end.
All right, Mark. Have a great day. Thanks for rolling in on Monday, and hopefully people will find that rainbow.